My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I'll do my friends. I'm just trying to make some money. My job's not just to entertain, but to educate, to teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Sometimes you have to ask yourself, where is the money going? Right now, it's pretty hit or miss when it comes to consumer. Home builders like Toll tonight are seeing some good money flows, but retailers are spotty. Macy's, Urban Outfitters, and Walmart hit, but Lowe's and Home Depot, well, they miss. Not a lot of money flowing to retail. Instead, it's flowing from one business to another, or maybe from a government to a business. After a day where the Dow advanced 66 points, S&P climbed 0.25% to a new high, and NASDAQ also hit a new high, up 0.22%. We see that at this moment, this very moment, because of these money flows, you got to be investing in companies that don't cater to just the consumer, albeit with some rare exceptions, and instead zero in on those that make money off the enterprise, as they call business. And now I've long championed this market. I've truly gotten comfortable with many of the sectors. But consumer spending on hard goods just ain't one of them. And that's a big reason why Lowe's saw its stock get hit today. Marvin Ellison, the CEO of Lowe's, is on tonight's show. And he'll talk about a consumer who's on the sidelines, who just isn't inclined to start spending on big home improvement projects. Why? He sums it up pretty darn well in his conference call. And I quote, uncertainty around interest rate cuts, stubborn inflationary pressures, and a consumer still showing a preference towards spending on discretionary services and experiences continues to weigh on the do-it-yourself home improvement demand, end quote. Too many homeowners with low or no mortgages. Too many people who don't want to take out a 7% mortgage to buy a new house and then be underwater immediately. No buyers of existing homes. What that means, of course, no renovation. So what can change that predicament? See, that's the problem. It's why I am so uncertain recommending consumer stocks. What can change the predicament? I'm not sure. As Brandon Sink, the CFO of Lowe's, said, quote, we're not seeing that inflection point, end quote. And then he goes on, quote, we don't necessarily expect or understand the timing of that, end quote. If he doesn't understand, how am I supposed to get it? So for Lowe's and for Home Depot before it, the landscape's not so much bleak. It's just not that rewarding. And that's how both stocks could get hammered on earnings, because the consumer's not opening her wallet enough in the stores. In a sense, it's becoming almost a winner-take-all, loser-take-none situation, with the winner, at least in the big box segment, being Walmart, which puts through breathtaking same-store sales and deserves to trade higher than its current $65 level, even though to many it seems like an exalted post. But money doesn't stay in a cul-de-sac, people. It doesn't wait for something to happen. It gravitates to where the spending's going. So where's the money going if most of the retail area is a no-go zone, even though two-thirds of our economy is indeed consumer? Well, we know there are some big themes that seemingly just can't be stopped, and the biggest one is data. Any kind of data. The data that Lowe's collects from its loyalty program, the data that Target has from its store floor when it reports tomorrow morning, the data that gets stored in the cloud so it can be interrogated by employees and machines looking for patterns. Right now, just as there are individuals who aren't spending all that much to fix up their homes, there are companies that will spend any amount of money to build out their computing power, with much of that going to, yes, the data centers. In a way, it's unfortunate because retail is so easy to understand, and everybody shops. But unless you're a computer scientist, it's difficult to understand where that data is going, and it's even harder to figure out which companies benefit from the newfound corporate need for analytics, training, inference. For me, I like to keep things simple for you, okay? And the companies with the most data that can do the most data interrogating, Amazon, Alphabet, Microsoft, Meta, and to some degree, Apple. Salesforce and ServiceNow, they've got some data. They're spending millions, they're spending just billions, actually, on buildings that are filled with, yes, NVIDIA chips. Hence the anticipation for tomorrow night's quarter. Do you remember, I remember when I was the only guy thinking about NVIDIA. What the heck happened? Well, Jensen Huang was always thinking about NVIDIA, he's the CEO. But now it's like NVIDIA. Like, people walk down the street and say, hey, how's NVIDIA? I hear him talking. They're like, hey, have you seen NVIDIA today? I mean, not to me, to each other. What the heck? Hey, let's talk about Eaton, Emerson, Vertiv. They make money, too. How about the plumbing? Marvell Tech, Arista Networks, Broadcom, Supermicro. NVIDIA. All right, did you see the action in Palo Alto Networks today, which we had on last time? At one point, the cybersecurity stock was down almost 24%, 24 points in wake of last night's quarter. Okay, 24 points. The stock cut that loss in half. At one point, it cut it by 2/3, finishing today down $12. Why was that? Because investors refused to hold off on buying shares in a cybersecurity company, not when businesses can't afford to stop spending their stuff because they got to protect their data. So you got to mine the data, you got to interrogate the data, you got to protect the data. Otherwise, they're going to end up like United Health Group, which is hit with a devastating hack that needed to be stopped but wasn't. I found it very telling today that CrowdStrike stock didn't get dragged down by a competitor. That's because its shareholder base knows how valuable CrowdStrike is to stopping the data from being hacked. They know that CrowdStrike's on a roll and its customers need it more than ever. The spigot from the tech titans to everything else, I don't know, it's just endless. You can't avoid it. Now, we've been stuck mostly talking about business spend, but lately we've been also getting signs that there might be another big form of spend with the consumer buying tech hardware. They're kind of just like, let's say they could be just sweetening things. I don't know yet, but we're now hearing from Microsoft about a brand new kind of PC that will replace most personal computers, one with an artificial intelligence copilot. The craziest thing is that even as Microsoft makes that pronouncement with such certainty, it hasn't meant much to the stocks related to the revolution. Okay, yeah, HP is up almost back to its 52-week high, but that 52-week high was back in July of last year when it was almost impossible to predict the new PC product cycle. Same with Best Buy, where you might be drawn to sample the AI-powered PC. Its stock is getting pummeled down to where it yields more than 5%. It's entirely possible that it'll take another whole quarter for the machines to get there, which is why I just say it's tantalizing. This whole thing's tantalizing, but it's just not tangible. Maybe we don't need to outthink it, though. The biggest winner of people buying more Windows PCs is the maker of Windows, Microsoft. The biggest winner in the data war might be Microsoft. The biggest winner in the web services war might end up being Microsoft. What else is the consumer spending on? It's hard to believe this from the pandemic, but the consumer's still traveling, going to live events, hence why Live Nation stock is soaring. As a consumer, I hate these extortion Ticketmaster fees, but as an investor, I love the business model. Consumers still spending on cruises, as we saw last night with the Norwegian Cruise Line holders. But she's not spending on herself the way she used to, except at Walmart, like I mentioned earlier, maybe Urban Outfitters, maybe some Macy's. The good news about the limited consumer spending is that we don't have to declare it static. Just like Lowe says, there will be an inflection point, and the money will start going to home improvement again. Right now, though, we just don't have enough housing turnover. Mortgage rates are simply too high. The lack of existing homes on the market is at least good for builders of new homes, like we saw from Toll tonight. Once rates come down, the money flow might shift, and then things will be better. But the bottom line, right now you have to follow the money, and it's currently flowing to businesses that cater to other businesses and the ones that need to interrogate the data. The rest, not much there. Ain't got nothing for them. Let's go to Chad in Wisconsin, please. Chad.
Hey there, Jim. How you doing today?
Today's a great day. How about you?
Excellent. We're doing excellent as well.
Oh,
hey, I had a question about a group that is going to eventually compete with Chipotle. It might take a while. Right. The PE is a little high on it. I did get into it a while back, around the upper 49s. Got back out of it around the 69 mark. Kind of regretted it because now it's over 80. Wanted to know what your thoughts were on Cava Group.
Cava, I'm very bullish. I think the comparison with Chipotle is actually, and I rarely ever say this, reasonable. It's not excessive, and I think Cava is really good. All right, listen, you always have to follow the money when you're picking stocks. Right now, it's flowing to businesses that cater to data and to data, but also data. On Mad Money tonight, I'm catching up with Lowe's after this morning's report set the stock lower to see if investors are getting an opportunity to do some buying in that home improvement retailer. Then can Deere plow ahead for the long term, or was the beaten lower quarter a sign that you should take your position out the pasture? I'll give you my take. And I'm going off the tape with the CEO of 100X to learn more about how the data company is giving investors a consumer-driven angle to help make more informed investing decisions. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.